Alright, what's up my little people? I know it's been a while during my exams, but in this video I'll be highlighting 8 stocks that you can potentially look to start investing in right now. Full disclaimer, I am not a financial advisor, so take this information with a grain of salt. However, do know that this information I am using came mostly from the Jane Fund Manager research team, so they might be gems, but consult with your financial advisor before you make any decisions. Okay, so with that out of the way, just remember to smash the like button for YouTube algorithm and definitely subscribe. So let's begin. The first stock is Grace Kennedy. Despite the elevated levels of geopolitical tensions and supply disruptions, Grace Kennedy's strong resilience to persist as the company makes significant changes to ensure its products and services are delivered to its customers across various channels. These include ensuring its international supply chain remains strong, active, efficient, and resilient. Its recent agreement with Nestle is one such initiative that Grace Kennedy has implemented to improve its distribution as the group moves closer to achieving its goal of creating a wider wingspan into the global area. Personally, I believe that Grace Kennedy is on track for further sustainable growth, given its well-diversified businesses across its 2 segments, which will likely be boosted by inorganic growth from its acquisitions. Grace Kennedy has initiated its multi-year transformational strategy in which it seeks to 1. Achieve sustainable efficiency, 2. Greater agility, and 3. Revenue growth. To achieve these goals, the group has made changes to its organizational and cost structure as well as its business processes, which have so far resulted in an upswing in its margin and profitability, which inevitably will prove well for the group's future. The truth is, Grace is one of those well-diversified companies that if you just buy this one company, you are almost guaranteed to be investing in almost, if not all, industries available on the stock market. The return on equity is 11.54%. The PE ratio is 13.05, and the price to book ratio is 1.50. Compare that to the industry average, which is 11.46%, 11.94, and 1.34 respectively. The next company is DTL or DERRIMON Trading Limited. DERRIMON Trading Limited is vertically integrated, which means it manufactures and distributes through its own channels such as Sampars and its select grocery retail outlets. Over the last 5 years, the company has gone through tremendous transformation driven by organic growth in its primary distribution segment, and through its recent acquisitions, the company raised additional equity through an IPO, which was used to lower its debt and to execute on its growth strategy, which included its acquisition of the Spicy Hill farm. Its expansion into central Jamaica and now the US is anticipated that these expansions, as well as other events to come that are in the pipeline, will continue to lower the risk profile of the entity and drive its earnings and growth in the short to medium term. The vitals for DTL is return on equity is 7.78, PE ratio is 31.66, and the price to book ratio is 2.46. Compare that to the industry average, it is 18.22%, 24.07, and 4.57 respectively. The third stock is Seprod. It's basically a long distance cousin for Grace and Lasco. Seprod is one of Jamaica's premier food manufacturing companies with over 75 years of experience operating locally. Over the period, the group has grown to include several diversified food subsidiaries, which is now easily recognized in household. Do you recognize any of these brands? The group currently enjoys a very strong presence in the local market, where it leads in several segments and continues to enjoy reasonable success within the Caribbean and a strong prospect in the United Kingdom, Africa, United States, and Canada. Not to mention its most recent acquisition. Personally, I don't know much about it, but I'll look into it going further. That essentially will help to propel them to have a much easier market penetration into new countries. Although the COVID-19 pandemic has had a negative impact on Seprod's operation, the group's diversified portfolio has proven to be resilient thus far. Looking ahead, there are still risks that could negatively impact global supply chains and ultimately affect raw material price, consumer income, and economic growth. Taking a bet, essentially, I would say that the worst part of the pandemic is behind us. The company's performance could likely see further improvement from the relaxation of the restrictions, which importantly includes the resumption of face-to-face school and the reopening of the entertainment sector. The return on equity for Seprod is 8.50%, the PE ratio is 27.09, and the price to book ratio is 2.3. Compare that to the industry average, it is 14.65%, 27.10, and 3.55 respectively. Before we go to the fourth stock, I want to let you guys know that I have an investor course that's only 6,000 Jamaican dollars. You get several resources that automatically calculate these ratios. You have a portfolio Excel tracker, you have a dividend calendar that tells you the stocks that have paid dividend already and those that are scheduled to pay out. In addition, there's a series of animated videos just like this that explain everything from what is the stock market to economic moat to valuation of a stock. Not to mention our community group that is on Telegram, where we basically just discuss all events that happen throughout the week. So if you're interested, you can DM me on Instagram at Garth_Grant_876 and let me know what you're interested in. Now for stock number 4. Undoubtedly, COVID-19 has had a negative impact on JP's business over the last 2 years and could continue to weigh on some of those segments in the short term. However, JP Group has remained strong and the pandemic has created opportunities for the new retail channels to offset the downturn in other areas. JP remains strong with several key financial metrics, including its large and growing cash and security balance, providing the group with the flexibility to manage and execute strategies of acquiring undervalued assets. Importantly, JP continues to strengthen its operations, and I anticipate that its recent acquisition in the food and logistics business naming will likely further improve its capacity and drive medium to long-term growth. Return on equity is 5.4%, the PE ratio is 13.55, and the price to book is 0.73. This compares to the industry average, which is 11.46%, 11.94, and 1.34 respectively. This stock, I am sure you have used their product some point in time, as long as you went to any form of schooling. The fifth stock is Wisynco. Wisynco is a prominent manufacturer and distributor of beverages and food items in Jamaica. With one of the largest sales forces in Jamaica, comprised of more than 700 sales-related employees, Wisynco boasts a sale and distribution infrastructure that has a significant presence in the marketplace. As its customers typically include restaurants, supermarket retailers, wholesale outlets, schools, and other food service outlets. During the pandemic, its customer base was severely disrupted, and with the restrictions that negatively impacted the business for the last 2 years have been removed, I anticipate that this will provide a flip to the company's revenue and profits in the short to medium term. Additionally, its strong balance sheet, particularly its cash position, not only positions the company to absorb shocks but also to capitalize on opportunities as they arise. The return on equity is 21.90%, the PE ratio is 25.32, and the price to book is 5.55. This compares to the industry average, which is 14.65%, 27.10, and 35.55 respectively. The sixth stock is a company that I stand behind 99.999999999%, and this is JMB. JMB has successfully deployed its capital to generate returns for its shareholders. Traditionally, the company has relied on interest income from repurchase agreements, dividend income from investment holdings, gains from security trades, and fees from unit trust management. However, over the last 10 years, Jamaica has seen a significant decline in interest rate, which has influenced financial entities to lean more towards generating fees, income from areas such as asset management, investment banking, and trading. JMB has grown its operation from strictly investment management, trading, stock brokeraging, and market making activities to include commercial banking. So at first they were just like an investment area where persons go to invest, but now they're actually a commercial bank, big bucks. Jamaica remains the core of its operation, but it has a significant presence in Trinidad and the Dominican Republic. Looking ahead, I anticipate that JMB's earnings will further diversify and be boosted through its equity stake in the Sagicor Financial Corporation. So I anticipate that this will help the group to yield positive results over the short to medium term. I know you might think that the price might not be moving much, and it's because it has heavy selling pressure from Trinidad. Sygnus is cross-listed simply because Trinidad investors want US dollars but have to acquire the quantity they need by buying it on the Trinidad exchange, then selling it on the Jamaica Stock Exchange to get Jamaican dollars in order to convert it to US dollars and then use it to do whatever they want after. I know it sounds complicated, but Trinidad dollar is pegged, so it means that they can't sell out more than a certain amount of their US dollars. But not like Jamaica fluctuates up and down. However, JMB is buying back shares gradually, and I am putting in my 2 cents as well. I am buying in it as well to reduce the amount of shares available for Trinidad to share and sell down the price. It's not a whole lot, so but yeah, it's a good company, and the vitals are return on equity would be 18.18%, PE ratio would be 7.67%, and the price to book ratio is 1.39. This compares to the industry average, which is 13.74%, 14.15%, and 2.05% respectively. The last stock is a real estate company, and I know Jamaicans are not necessarily real estate type because real estate companies call themselves REIT, but they don't necessarily operate as one. So who would actually be interested in it? Unless you create, then you will get favorable market sentiments. But that's that. So the 7th stock is Sygnus Real Estate Finance Limited. Sygnus Real Estate is a specialty real estate investment company dedicated to providing flexible financing to unlock value in real estate assets across the Caribbean. SRF is an alternative investment firm that is solely dedicated to the real estate asset class by providing customized financing solutions in various forms across the credit and equity spectrum. Sygnus Real Estate Financing Limited will seek to earn attractive risk-adjusted return with downside protection. Personally, I anticipate that real estate could continue to perform well as a leading growth sector. Also, a little plug, this is what they are building now. Well, one of the projects they have. This is the $3.71 billion project. I guess I talked to the constructor over there, and they say it should take about 2.5 years to be finished, and basically the top aspect of it already has been applied for already, so they basically have tenants before it's finished. So there's a heads up for that company. The return on equity is 10.17, the PE ratio is 7.99, and the price to book ratio is not 81. This compares to the industry average, which is 8.41%, 9.58, and 0.84 respectively. So guys, remember, I am not a financial advisor. I just took information from actual financial advisors and pretty it up. basically. So talk to your financial advisor about them, ask them if it's good for your risk profile and so on and so forth. Just remember to smash the like button for the YouTube algorithm. Like, share, comment, subscribe, tell your friend to subscribe, tell cousin, your auntie, your sister, your brother, everybody, and thank you for watching. So see you in the next video. Peace.